Hello traders and welcome to another video review. Today is Thursday, February 3rd, 2022. Let's start with the Forex calendar. Plenty of PMI data is scheduled for release overnight and during the London session, PMI Composite from Japan had beat the expectations of 48.8 with the actual reading of 49.9, which is very nice and better than the last reading of 48.8. Some market data are scheduled for release during the London session that are not the PMI services or composite data are CPI from Switzerland and the PPI data from the Eurozone. The key event of today is of course the Bank of England interest rate decision that will be published at 1 p.m. together with the asset purchase facility, official bank rate votes and MPC asset purchase facility votes. Monetary policy summary and monetary policy report will be published at 1 p.m. as well. Moreover, we got the ECB interest rate announcement today at 1:45 together with the deposit facility rate and marginal lending facility. We got the monetary policy report scheduled for release at 1:45 and 2:30 we got the ECB press conference. As you can see, the market participants are expect the ECB to leave the interest rate at the level of 0% and to hike the Bank of England to hike the interest rate to the level of 0.50. During the New York session, we got some data from the labor market, non-farm productivity for the fourth quarter, labor cost. We got the unemployment claims and continuing claims, and of course, the US will post the final services PMI, composite PMI, and of course ISM services PMI data. So very busy day today. PMI data scheduled for release whole day, Bank of England interest rate decision, ECB interest rate decision, and ISM services PMI from the US. Plenty of things to keep an eye on. So today might be the day when the markets will be a little bit more violent, when the markets will be moving not necessarily in the desired direction, or this direction will not necessarily be sustained. We might have some whipsaws, we might have some false breakouts. So please keep an eye on the situation on the markets, keep an eye on the fundamental data and see how the market is responding to the data posted, because this is the key thing here. Technical part of the review, we are going to start with the euro dollar. As you can see, just before the ECB interest rate announcement, the euro dollar has managed to bounce towards the short-term trend line. This trend line is marked in orange. The local high was made at 1.1330, and since then, of course, the volatility decreased as the market participants expect they are waiting for the interest rate decision and expect the ECB will hold the interest rate at the level of 0%. So right now, technical levels for support are 1.1273, 1.1225, and of course the levels at 1.1167, 1.1153. So those levels here are the key levels for support. The resistance is of course the trend line and then the upper channel line. And as you can see here, we got 1.1383, 1.1422, one of the key levels, and 1.1501, the second key level for bulls. This is of course the technical resistance. So momentum is neutral, so it's a perfect alignment just before the ECB interest rate announcement. So the market participants are not sure what the ECB will do, so they want to stay away from the markets for now wait for the dust to settle, and then of course start trading. This scenario, as you can see here, with market with the red arrow down, is showing the possibility of test of the trend line, which happened, and then decline lower in order to continue, of course, this down move that we are witnessing here. So only if the market is out of the channel and above the recent high at 1.1483, we can say that the down trend, this is more than a half year, this is more than a half year long downtrend. This trend is terminated. So please keep an eye on the market behavior. In order for the euro dollar to go down, the US dollar index that we are looking for now must be, of course, must go up as well. So what's happened on the US dollar index, as we can see here, it's very clear that this pin bar here was the warning of the potential reversal. We got three days down, and we retraced, let me just take a look, around the 50% of the, there you go, 50% of the up move, 96 points. We are heading towards 61%, 95.67. However, please notice the fact that market almost hit the extremely about conditions as well, and right now we are waiting for this market to resume the up move. If the US dollar index resume the up move, then of course we can expect a hit of 61% of the Fibonacci extension, 97.70, or hit of the technical level of 97.77. So those are the targets for the US dollar index. Only a sustained breakout below the lows of the Fed. This is the Fed low at the level of 94.60. Only if we break below this level, then we can say, okay, we got the top on the US dollar index, and now US dollar index is no longer the king, and we should expect a drop in US dollar index. Lower lows should be made, which means the euro dollar will be rallying, pound will be rallying, and stuff like this. So please keep an eye on the US dollar index as well. And last but not least, let's take a look at British pound. Just before the Bank of England interest rate announcement, when the market participants expect the hike from 0.25 to 0.50, market has been rallying all week long. As you can see, it's in line with our expectations, because the market first has been rallying from the end of the 2021. Then we have the retracement, 61% retracement, and then of course just before the very important announcement, we have Monday, Wednesday, Tuesday, Wednesday, and today's market rallying, and yesterday of course as well. So we broke above the 1.3515 technical resistance, testing 1.3568, 1.3605 now, and we are waiting for another move to the upside soon. If market will see a hike in the British pound as a bullish trigger because of potential further rate hikes, so the market participants will keep buying British pound, because it's better to buy now while it is still cheaper than later when it's expensive, more expensive, right? So we might see a further market up move, further market British pound increase even higher above 1.3750 easily. So that change in the monetary policy might have brutal consequences, especially if we take a look here. That might be just 5-wave advance, A, B, C zigzag correction into 61% of the Fibonacci retracement, and wave 3 in the making. As you can see, when I zoom out, you might clearly see that we used to be in the uptrend after the COVID pandemic, and as you can see here, after the COVID pandemic, we used to be in the uptrend, and this move looks clearly corrective to me. Okay, so that move up is more impulsive, that move down is more corrective, which means eventually that the British pound should continue, the up move should continue, this cycle up should be continued. So we should see soon new higher levels on the British pound. And let's take a look at the Bitcoin as usual at the end. So what is going on the Bitcoin? Let me just zoom in. The market of Bitcoin is clearly going down. This is very obvious. The bulls have absolutely no control. The bulls have absolutely no power over the current market developings. Bears are in control, bulls are weak, and the bears eventually will push the price below $30,000 towards 28,964. Very bad response from bulls will likely end up with this kind of a situation. So the longer bulls wait for a breakout above 41,188, the more painful it will be for everyone, because the bears will push the prices lower, way below $30,000, and maybe that's not even the case, because if, as I said many times before, if we break below 28,964, 30,000 is not the case. The case is a little bit lower, because that would mean the Bitcoin will enter multi-year downtrend. So we need a more stronger, more dynamic response from the bullish camp above 41,188 in order to at least sustain the bounce and sustain the up move towards higher levels, because we already on the Bitcoin market lost way more than 50% since the top at 68,959 right? So the current situation is really not good for bulls, and plenty of the people that are hodlers might see this situation as a difficult, and they might start to close the long positions after the 28,964 is violated, and then we are going to stop around the level of 20,000 very soon because of the sell-off. So that's my outlook for the near term and the mid term for the Bitcoin and the rest of the currencies. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.